Hello everyone! This is gonna be a quite long and boring and difficult movie about the introduction of a basic income and tax shift from taxes on labor towards consumption taxes. First, briefly the principle. Look at your net income. Remove all the taxes above that. What's happening? You become much cheaper for your employer. If you become much cheaper for your employer, he should reduce the prices for what he sells. This price reduction in the shop, we will compensate via some consumption tax. So that the products cost as much as today, fine, because you will also earn as much as today. The big benefit is the fact that you become much cheaper for your employer. The government also gets as much money as today. Pushing it further, imagine that we replace a part of your net income by something called basic income. This is something we give to everyone, conditionally or unconditionally, in principle, unconditionally. That would again reduce how much you cost to your employer. But the state gets that via the consumption taxes. That's a principle, but that sounds very simple. It's complex to introduce such a thing. My proposal how to do that, it's a phased approach. A first phase would be a strong review of our tax system in Belgium. Income taxes, your tax declaration, with introduction of something like a basic income. Second phase would be the tax shift, which I would do sector per sector. It's gonna be a complex one. The first one is also complex, by the way. And then phase 3 would be improving that basic income. Let's jump in phase 1. So, the tax. Today, every year in Belgium, you have to file your tax declaration, which states your total income, which states also things you can subtract from that income on which you don't pay taxes. Well, that's the idea. However, our system is also complicated. You have some level of an income you can have which is free of taxes. And then you pay 10%, 20%, 30%, and quickly that raises to 50% for the amounts you earn more than that low income. I want to go to a flat income tax percentage. Many other countries work that way, by the way, and they're not by definition asocial countries. Now, the impact would be that the people that earn not much money, I want to keep the net income always the same, but so they're gonna cost more to their employers. And that would also mean that people that earn much would become cheaper to the employers. Mainly the first thing I don't like, but we'll do something about it in a few minutes. There is other incomes, like imagine you have a house, then you're charged on what we call the cadastral income, so that's an estimated income of the house. That's just a flat percentage. It's taxed separately. We don't need to change that. Similarly, imagine you have some money on the bank gives you a little bit of interest. Well, the state takes a part of that interest. Imagine you have shares of companies. Also there, if they give you like dividends, the state eats part of that money away. Yeah. Your deductions. Now, imagine you have children. Then children are deductible. I mean, you can deduct some money if you have children. This means that you pay less taxes on your income, and on top of that, you get children's money. Why don't we just increase children's money and remove the reduction of taxes? Would be a zero operation, almost, yeah. But it would also be much more simple. And one of the things I'm really looking at is simplification. So, but it's not so easy. The problem is you may have adults that don't have an income that live with you. For instance, my daughter, she doesn't study, so we don't get children's money, but she is still deductible. This inspired me to say, let's introduce a basic income, which is going to replace part of the net income. The taxes we would put would be on the salary part, okay? It's gonna also be paid by salary taxes at this moment because we are not yet doing the tax shift. What would that do? In Belgium, the average brut salary, don't forget on top of that there is still 25% of taxes your employer pays in addition. The average brut salary would be around 3,800 euro. Of this, in net you have something like 2,730 euro. Someone having such income costs today to his employer 4,750 euro. Imagine that we give a basic income of something like 900 euro, then of course the net salary part would be reduced to 1,830 euro, something like that. Imagine we would put 230% taxes on that, a flat percentage. You would cost to your employer something like 4,759 euros. So that's almost the same. Now I must admit, it all depends on how big is the basic income we give and how big is going to be the percentage of charges we put. With the amounts I use here, the result would still be that someone earning the least income, he's going to cost more, and also people having very high incomes will cost more. Example, someone having the minimum salary, he would earn net something like 1,770 euro in Belgium. Today, someone like that would cost something like 2,625 euro. In my system, he would cost 2,871 euro, so that is like 250 euro more. That's quite much. Maybe temporarily we should give some additional money to the employers, the people that earn not much money. However, this is having a weird side effect that would mean basically if now we increase the salary, we're gonna take the additional money the state gives away. But we just want the people to earn more, definitely the people that don't earn much. So maybe not a good idea, maybe we must just live with it. There is other things we can deduct from taxes, and we'll need to think about all of them. Let me just give one example. If in Belgium you hire someone, for instance, to clean your house, they do that officially, then you work with what we call service checks. The first X service checks are deductible. It's limited to a number of service checks, and every year it seems to reduce a bit. Why don't we just sell the first X service checks you buy in a year cheaper, instead of giving a reduction? Like this, we'll have to look at all those deductions because I want them all gone. I want paying salary to become very simple. I give you some net amount, I calculate how much taxes that is. If I have fixed percentage, that should be easy. And so I also know how much I pay to the government. End of discussion. It's also going to cost less people to control this. It would be easier. So that's the first phase. Second phase is a tax shift. The big idea of the tax shift is that what I said at the beginning. Now the salary cost goes down, and so the prices or the sales prices will go down, but we use a consumption tax, and my preferred one would be VAT. For people working for the government, it's already simple. I don't need to care about the taxes anymore, do I? Because I just give the net salary. It doesn't make sense. I pay myself taxes as government. Let's take a complex example. Imagine we produce cars, which we do in Belgium. Think of Audi. Imagine an Audi standing on the parking in Vorst for 20,000 euro today. Imagine we take 20% VAT, it is 21, I know, but that's difficult to calculate. That would mean that a Belgian garage buying that car in Vorst, it would pay 20,000 euro plus 4,000 euro VAT. Imagine it's taking a markup of 10,000 euro, so it would sell the Audi for 30,000 euro plus VAT. That would mean you're gonna pay 36,000 euro. And 30,000 plus 6,000 euro VAT. The Belgian garage in its VAT declaration can deduct the 4,000 euro it paid to Audi Vorst, but needs to pay the 6,000 euro that it got from you as a consumer, so that means in total it pays 2,000 euro, Vorst paid the 4,000 euro. That's how VAT works. So imagine that tomorrow this Audi only costs 12,000 euro because of the reduction of the labor costs. Then imagine that we introduce that, or that we increase the VAT to 100%. Then the Belgian garage will pay 12,000 euro to Audi Vorst plus 12,000 euro VAT. Imagine instead of 10,000 euro markup, in which there is again a lot of labor costs, imagine it would only need a markup of 6,000 euro. That would mean 12,000 euro plus 6,000 euro, 18,000 euro would be the cost, the money for which it wants to sell the Audi. Plus, of course, 100% VAT means 36,000 euro. Hey, that's exactly the same as today. So that's the principle. But we run into trouble with VAT. Within Europe, there is something like, how to call this in English? Verlegging. The thing is, imagine a French garage buying the Audi today. They only pay 20,000 euro. They don't pay Belgian VAT. They make a markup. They want to sell it for 30,000 euro plus French VAT, let that also be 20%. So they're gonna sell the Audi for 36,000 euro like in Belgium. Fine. The big thing is France collects 6,000 euro VAT and Belgium nothing. Imagine that Belgium also imports things from France, it will be more or less a zero operation in total, because of course it works in the two directions the same way. But this is gonna kill us, this way of working. Imagine that now the Audi stands there for 12,000 euro. The French garage buys it, no VAT, so 12,000 euro to Belgium. It wants to have a markup of 10,000 euro, so the Audi stands there for sales for 22,000 euro plus French VAT, so that's 26,000 and a bit, instead of 36,000. That means that the Audi became much cheaper in France. That means me as a nice Belgian, I'm gonna buy my Audi in France, am I? Sure. So, we have a problem. However, if we force the local VAT to be paid, and you could deduct the local VAT in your country, as that would have been applied, that changes the story. Because then the French garage will need to pay 12,000 euro to Audi Vorst plus 12,000 euro VAT, which comes to Belgium, like a Belgian garage. It could deduct the French VAT, that would be 4,000 euro. So it has the Audi for 20,000 euro. And then, of course, it's clear it's going to be the same. They need still their markup of 10,000 euro, and so it's going to cost 36,000 euro, like in Belgium. It also works the opposite way. Imagine today a Belgian garage buying a Passat, a Volkswagen in Wolfsburg. Today it's going to pay 20,000 euro, forget VAT. It sells it for 30,000 euro plus 6,000 euro VAT. 6,000 euro VAT in Belgian pocket. Tomorrow it would pay, without changing the VAT mechanism, it would pay 20,000 euro to Wolfsburg, have a markup of 6,000 euro, so sells the Volkswagen for 26,000 euro plus 100% VAT. That is 52,000 euro instead of 36,000 euro. So nobody is going to buy that car anymore in Belgium. So that's not what we want. But imagine we change the VAT mechanism in order for the Belgian garage, when it buys the Volkswagen in Wolfsburg, to pay the German VAT. That would mean he's going to pay 20,000 euro plus 4,000 euro VAT. The Volkswagen comes in Belgium, it can deduct the Belgian VAT, 12,000 euro. So then we end up in the same mechanism as today. So then the Volkswagen costed the Belgian garage 12,000 euro. It's gonna sell it for 18,000 euro plus 100% VAT, 36,000 euro as today. Still, the big benefit is that workers in Belgium became much cheaper. And in fact, the mechanism is much more simple than today. This reasoning we'll need to make sector per sector. Now, note that in Belgium we have still another very interesting mechanism. It's the index. It means that in Belgium, if the prices of the goods and services you need as a family increase, automatically your income will also be increased. The truth is, we won't manage to keep all the prices exactly the same. Some things will become more costly, other things may become more cheap. Looking at that index mechanism means it's not a drama. And given the fact we have a basic income and a salary component, now we could even play with, eventually, which one we're going to increase. It's true we'll need to review that index mechanism, because historically quite some governments have been messing with it and kicked out a few things which maybe they shouldn't have. So we'll need to carefully monitor it. But anyway, the principle is there. We will need absolutely to monitor the buying power of the people. If that changes in some way, we'll make sure their income follows that. Having done the tax shift in all sectors, then we can look again at the basic income, because in fact I would like the basic income to become as high as someone, a single person, would get today as living salary. That means if you don't find a job, the government gives you that money in Belgium. I want the basic income to reach that level so that we can again simplify many things. There is some impact though, because now if imagine today you don't find a job and you're poor, then you get, but you don't live alone, this kind of money you get is less. And I'm wondering, okay, I understand the social reasoning, like if you live together your costs are less. But if we think about the environment, should we continue to do that? Because now, imagine you are poor and you go to live with someone, financially you're kind of punished. Whereas, if I want to be green, if I think of the environment, I should just encourage people as much as possible to go to live together. Imagine you live alone, you have your bathroom, you need to heat your bathroom. Imagine you live together, together you have one bathroom. Only one bathroom to be heated. If you both live alone, it's two bathrooms to be heated. So that's bad for the environment. But there is a lot that the green parties should do different from what they do. But And that's another discussion I will make if Phil wants to hit them very hard. Thanks for your attention.